flow, whenever someone starts the business, right, he actually starts with a cash flow statement only. There is nothing like P&L or a balance sheet comes into his play. He actually starts, whenever he thinks about a business, he actually starts with an cash flow. First, he need to collect some capital for himself to do the business. So that's where financing activity come into play. He will get some capital, and with that capital he is investing into assets, and that assets will create some sales, and that sales will create some operating profits. So that's how the in the beginning of the stage of the business, financing cash flow, then comes investing cash flow, then comes operating cash flow. And after the business keeps on running, right, then comes the operating activity, then comes whatever the money that you have made it from your own business, internal cash, you are going to invest some into your investments. And if you're still left out with the money, then you are going to pay it for your financing activity. That might be like you would have taken a debt, you would have you're going to repay your debt, or you are going to give dividends, or you're buying back your shares. That comes into financing activity. So focusing on one statement, that to cash flow from cash flow statement is more important than any other statement that you can look into. So I have an example over here, cash flow from operating activities. So just briefly, if I wanted to calculate what is cash flow from operations, a brief formula that you can take it is net profit plus depreciation or amortization minus working capital changes. Just do this mota, you will get an cash flow from operations from the business. What you do is just simple, that CFO divided by net profit greater than 1. If you think for every 1 rupee of the profit what you make in the net profit terms, if your cash flow is greater than that, that means that it is qualified. I have an example of three companies over here, and three are all these three companies are from the same sector. They're actually from a paint sector, and they all are from the same sector. Look at these companies like company A, company B, and company C. By looking at this chart, would anyone like to answer that which company they would be interested to be invested in? Ankit, would you like to answer this?
Any anyone? Kaushik, you have already shared the presentation with me, so I would not like to
Got
uh,
it.
give the answer. I'm seeing a lot of people giving the answer on the chat box. Let me just read it out to you.
Yes.
Just a second. So I see a lot of people saying B. So I see uh, Pramod saying company B, Jignesh saying company B, and Vishant saying company B, and
Yes.
Sunny saying company B.
That's really good answer that they have given. So I've just taken last 10 years data and just did this. Majority of the time, green is coming to B, and B company. Let me tell you, in 2022, if you had invested your money in 2021 and 2022, this company's stock price performance is down. But when it comes to the March 2011 till date, their performance is really great. They have become a multi-baggers for a lot of people, a lot of investors in the industry. They actually talk about this stock day and out everywhere to the investors. Like they just a lot of people only talk about B as a great investment for their that they made it in the past. So look at this stock in March 2021 and March 2022. What happened to this company? Uh, uh, in the stock price performance, they were very underperformer. When it comes to the company B, the competitor of this, they were also underperforming, not up to the company B, but company C. Look at this, they haven't qualified this simple ratio for us, and only one time they have qualified it. But this company has skyrocketed their stock prices. The stock price return are like fantastic for company C. And ironically, company B's management was buying its stake from the market. Company A's management was not doing anything, but company C's management was actually selling their stake in the market. And also there was they increased their slightly, there was an increase in their pledge holding also. So this is very common ratio, but led to an stock price performance. But still, company sees stock price is going up, but when it comes to fundamentally looking at their numbers, they're not very right for us. So think very simple. Cash flow from operations is like net profit plus depreciation minus working capital changes. When net profit से ज़्यादा रहना है, cash flow from operations greater than 1 is what the formula tells. And we are adding some major amount to that, and only deducting some working capital changes. Is company pay? By just looking at this formula and the company see, we can understand there is some problem in working capital changes. So we have to dig on to their working capital changes a lot, and then understand what is the problem in their working capital changes. Is a payment related problem, is that receivable problem, or is it like an inventory problem? We have to get in very clear clarifications on working capital, then only you can look into C as a company as a potential investment. If you are looking at or an A or an B, anything, any company that you are looking at, this is the number that is very very important. This is the number that very important focus should be going on. So let me give here an example. Today we actually speak about investing in a lot of companies, right? Let me give an example. Think like this. There are two people in market. One is an experienced person and another one is an non-experienced person with, but he's a wealthy guy. Over the time, right? Wealthy becomes an experienced person, and person become a wealthy person over the time in stock markets. That's going to be the golden rule of stock markets. If you can get yourself experienced by analyzing a lot of companies and their kind of things what happens in their numbers,